What's happening? What's happening? What's happening, everybody? Too far? What's going on? How y'all doing? How y'all doing? Gotta put my soul glow up, though. Y'all be letting me go on without my soul glow. Y'all be letting me go on without my soul glow. Good morning, good morning, good morning, everybody. Hey, how you doing? I'm glad that y'all got through. We're gonna go ahead and get into it this morning. We're gonna get into it this morning. Um, welcome, 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 everybody. I'd like to welcome y'all to what is today. I'd like to welcome y'all to the overnight price action for October 13th, 2022. Yeah. Hey, man, it's your first time tuning in. I like to say welcome. If it's not your first time tuning in, I still like to say welcome and thank you for always pulling up and hanging out with us. Y'all see Spidey hanging out back there. Welcome to Tim's Tidbit. Like I say, this is the overnight price action for October 13th. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. Once in the morning, 9 a.m. Eastern time. Once in the evening, typically at 6:30 Eastern time during football season. We've been doing it at 7:30 because the adventures of Super Dad don't stop. But what do? We talk about the price action. Started out doing Tim's Tidbit by sharing all my knowledge with, stock market, investing, trading. And now that I'm a full-time trader, I decided to get on Al Gore's internet every day and just show people what a full-time trader would do in any situation. If the market going up, if the market going down, the market going sideways, what does the price action say? And all the stuff that I share on Al Gore's internet for free is stuff that you can get from free from ICT. Because that's all I do. I just read the price action and I take trades when it's time to take trades. I sit on my hands when it's time to sit on my hands, and I watch Netflix and let the TV watch me while I sleep when it's time to watch Netflix and let the TV watch me when I'm asleep. That's all I got, man. All I ask you to do is hit the like button. I do it for the free 99, so please hit the like button. I ain't on no other social media, so I can't go out and be like, hey, y'all, check out this cool video that I made. I ain't on no other social media right now. I pop on Instagram when people send me something funny. I open it up, watch it. But other than that, I don't be scrolling. I have relinquished control of the scroll. The control of the scroll is going out my life, so I need y'all to hit the like button so other cousins can see this. It's not about me growing a channel. It's about people getting the information. I could care less if they come and watch it or not. I'm going to keep doing it just in case somebody wants to pop up and see what's going on, man. Just in case. Hey, man, let's get into it, man. I done ran my mouth enough. The same people show up every day, so y'all already know what I'm talking about. That's just in case somebody else come up later on that what the analytics, they be saying like 35 or 40% of the people that watch my videos not subscribed, and they'd be like unique viewers, meaning they coming for the first time. So it is some new people popping up. So that stuff in the beginning, that's for y'all. The rest of the gang, hey man, how y'all doing? Hey, how you doing? Let's see who in here today. Rhonda Green, I'm on time today. Rhonda Green say she got time. Rhonda Green said, I just looked at my wrist. I got time today. I'm drawing a line today. What's up, Angela? What's going on? Here to learn and share. Good morning to you. The birds are chirping. Hello, Brittany. How are you? Good morning. Good morning. Fadio. What's going on, Fadio? What's going on, Cameron? Gabriel Towns, Devario even. Devario, what name you going by today? What's up? Cool it now. Ooh, watch out. Cool it. There go that drop, cool it. Remember the dump you was talking about? It is here. It is. I said I'm not a betting man. But if I was a betting man, I would say we were going to get them lows we have been flirting with. Hello, Lou. How are you? Are you married, Lou? Is your husband married, Lou? We were flirting with the low. And we have finally overtaken the low. What's up, Audrey? Good morning with the gang, Spidey. She said hello. Valdez, what's going on, Valdez? What's going on, Farrah? Sanjay, what's up, Trey? Tell them boys I said, what's going on? What's going on? Hey, man, let's go ahead and get into it, man. I appreciate y'all for pulling up, hanging out with your boy. Let's jump right into it. Let's go see what made this market go tankety tank. For those who don't know about econoday.com, econoday.com is my site of choice for getting my economic data. You go to econoday.com and click on view full calendar, as you just saw me do. If you didn't see where it was, the button is right there. That yellow button right there that says view full calendar. Click on that. Pulls up the weekly economic data at 1 week at a time. You can also go to forexfactory.com. That's another great site. Forex, like trading Forex, Forex factory, all one word, forexfactory.com, and it pulls up the information. It's okay, then out of service. It's in one column straight down the middle. You can pick the range you want to see. I've gone like a month out. I don't know how far out you can go, but I've gone a month out. But we just set it for a week, hit apply settings, and it show you the full week, and it's just one whole column. And they have folders, and you got to click on the expand open details button to see, you know what I'm saying, the details. You can also filter it in other currencies that you want to see. I only want to see the US dollar because I only trade the US markets, the SPY, QQQ, stuff like that. You know what I'm saying? But that's forexfactory.com. Same information. I like Econoday. On Econoday, you got the word report, you got the word consensus. If you click on either, it takes you to the same screen. Only difference is when you click on, once it says report, there's an additional column out to the far right of the data right here that says actual. There's an additional column right here that says actual. And but before, when it says consensus, you only have these columns to the left. Those the only columns be there. And as you can see today is the reason why we got a dump. They expected CPI to increase slightly. Prior it was 0.1. They expected 0.2, and we got 0.4. Way hotter than expected. They expected the year over year to drop slightly. They wanted it to drop to 8.1. It only dropped to 8.2. Didn't drop as much as they hoped it would. Bad juju. They expected the core to reduce. The core stayed the same. They expected the year over year to go up. Core year over year to go up. It went up more than expected. Hot, feeling hot, feeling hot. So what did the market do with this information? Let's go over here and look at our homegirl for a second before we get into the ES. We're going to look at our homegirl. Y'all know her name. What's her name? Y'all sing it with me. Sparleen, where you at, baby? Here I go. Hey, how you doing? I'm glad that you got through. Sparleen is about to have a massive gap down. Almost $10. We closed at 356.57 yesterday, and right now in pre-market we're at 349.73. Right? Let's zoom out, see where we at down here. I put it on weeklies. Let's put it on monthlies so we can see where we at. Let's go to the ES real quick. Yes, we're down here. We got a weekly fair value gap. Look like I marked out right there. It's a weekly fair value gap. We're down here in this monthly order block that we was talking about. Right, let's talk about this monthly order block right here, and then we have this daily fair value gap. And if I'm not mistaken, I think it was a full daily gap at the top of this fair value gap. So Right now we got down here to this order block that we have been peeping for a very long time. We finally got down to it in the pre-market. Will this be the flush? Will this be the flush? The final bear market flush that we've been waiting for? Or are we still going down Baby Yo Street in a Range Rover? Who knows? No one can say for sure. But next time on Dragon Ball Z. Hey, let's go look at the ES. Because looking at, when I walked back here, I saw this wick right here. That's the wick that I saw. I came in here this morning about 6:30. It was about 6:30 or so, 7 o'clock, 6:30, 7 o'clock. We were somewhere up in here in these candles right here. This the 6 o'clock candle. This the 7 o'clock candle. So yeah, it was around this time we were making these candles right here, pushing up. Had the break in market structure. As you see, I put this hourly fair value gap right there. I can get him out of there. Get out of here. We had this 4-hour order block. We can get that. Get out of here. You're gone. We had this daily low that I put right here. You're out of here. I'm gonna take you and put you down here at the bottom. I'm not going to delete you. I'm gonna put you at the bottom of this wick right here, so I can keep moving you down. If we continue to push, down, I can just keep bumping you down. Now we got stupido range. We came up here to this daily rejection block on the news. The news pushed us up here. I had a daily rejection block marked out at the top right there. For anybody who don't know what I'm talking about, no, that's 4-hour. I'm sorry, I said daily, but I got my colors like kind of muted so that they don't be standing out and like being too overbearing. And it looked white. It looks white a little bit because of the glare I'm getting, but I got them muted so that they don't stand out so much. But if I brighten it back up to how it was, see, it's cayenne. That's the cayenne pepper. So that's 4-hour. That's my 4-hour color. I guess I'll brighten it up a little bit so that I can see the right colors while I'm on here with y'all. I had them like crazy muted because it was like really, it was getting to be too much, like that 25, way too much. But when I go, I guess I'm about to leave it on 25. Was this a fair value gap? Let me just go to my template instead of trying to figure it out. Put my template on. Okay, boom. There you go. So 10 is my all right. Okay, so right here, there's that rejection block. Did I say rejection block earlier? I had this I marked out this 4-hour rejection block right here. I marked out some other stuff, but as you see with the news candle, I deleted that other stuff already. With this news candle, we came up, hit that rejection block, and then came down Baby Yo Street in the Range Rover. We went up there before the news candle. Before we went up there, it's like we was up there before the news candle. Cause the news candle just went down. I saw the I was looking at it. I had my phone pulled up while I was riding. No, it didn't. Yes, it did. Yeah, there you go. That's news candle right there. See, we went up there before the news. Yes, because I'm like, we popped up there before. So right before the news, the algos took off. Ping out. They shot up right before the news, took this out, and then started melting back down and closed there. And when the news came open, it gapped down. So it had already, you know what I'm saying? The algos already knew what the lick was. They was trying to get up here to run this buy-side liquidity so that when the news come out, and if y'all notice, right, when I came in here last night about 12, well, I was in here last night because I was in here bored. I started to send this out in the and on Instagram, but I didn't. And cause my trading view don't be saving. But I was in here bored last night, and I was going through breaking down, looking. I was just in here reading the price action. I was in here reading the price action like a steamy novel. And if y'all ain't never seen some of the ICT videos when he be talking about breaking it down and like throughout the weeks, you know what I'm saying? I just went through an hour break and I can't save. It's like I went through all this right here and I try to save it and it won't save. So you know what I'm saying? But I was just reading and I started to send this out. You know what I'm saying? Then I was like, I ain't gonna send it out because we gonna dump tomorrow and then it's gonna be null and void anyway. You know what I'm saying? But I was just, you know what I'm saying? And I was in here last night. Do it got the time on here? No, it don't show the time on there. I was trying to see if it showed what time I took that screenshot. But get out of my way. Yeah, so it went up here to the rejection block. Let's look at overnight price action, right? So we consolidated throughout the Asian and throughout up into the London. At the London Open, we came down and ran sell side liquidity. Boom, we dropped down, ran sell side liquidity up under this consolidation area that we had been in for a minute, right? And so we still didn't break the weekly low. We just broke below the low of the 12th, was it? Yes, the low of the 12th. We broke below the low of the 12 yesterday. We broke below yesterday's low, and then we started pushing, right? And we came all the way up, right? Because I was in here. I was just leaving out. I was typing up a note for Timothy's school. I had sent emails, but I typed up the note just in case. And I said, look how we set those equal highs right there and wick back down. I said, we're going to run those highs. When the news come out, then we're going to dumpity dump, right? So I had no idea how high we was going to go. So I didn't play Risky Roger and try to, you know what I'm saying, set no order to be up here to go in. Because like you see I did, I had already noted this rejection block right there. We had a daily high right there above that area. We got a weekly high right above this rejection block. We got another weekly high over here. It's like, so I didn't know how high we was going to poke up, right? So we poked up to the rejection block. That was the destination for the algos. We done took that low out already. That was the destination for the algos. We poked up above that rejection block. Hey, let's go and see if we get one of those things that, oh, let me go back. The other night, yesterday, let me fix this real quick. Remember last night when I was talking about the looking at the video, and I was like, I can't remember exactly what he said, but I went back and looked at the video and I was kind of messing it up. I ain't gonna hold you. I messed it up real good. I had the premise down, but I messed it up real good. So let's go back right here to the 7th, right? So on the non-farm payroll numbers, right? The non-farm payroll numbers, boop, hide that out the screen like that. There you go. So on the non-farm payroll numbers, right? The news came out. We pushed up, ran by side. The news came out. We died off, right? We died off. We ran them lows, right? We died off, ran the low. This is what I messed up last night. So we got the this right here was the fair value gap there. This was the measuring gap here, right? And when I went back and looked at the video, what he said was, because I tore it up last night. I totally tore it up. Please go look at the video for yourself. It's the bridge video when he talked about this, right? So when we on the news, the non-farm payroll news, right? We ran buy side before the news. When the news came out, we sold off drastically and ran these lows, right? Once we ran these lows and traded back up, right? Now we got this portion of it, like everything is balanced because this candle here, let me blow it up right here so y'all can see, right? Let me blow it up so you can see. So this candle here, we traded down and traded back up, offered both ways, right? This candle here, we went to the top of that candle, offered so and went both ways. Then we traded down this part that we already balanced, right? We came down, broke the lows over there, traded back up, offered both ways, right? This candle here traded back up, overlapping this candle's wick, and then we left that balanced area. This whole area up in here is balanced, right? When we left that balanced area, we made a fair value gap right here, right? There's no need for price to come back up here because all of this from this candle up has been balanced, right? Because we traded both ways there, right? Traded both ways there, left that area because that area balanced, right? Traded both ways here. This little piece of area balanced, right? This candle here traded both ways. So this area balanced because traded both ways. This, all of this right here is balanced, right? So when we left that area, the only thing the algos had to do was come back to get this fair value gap right here, right? So that's the fair value gap that it went back to get. I tore this up last night. I had the premise of what was going on, but I tore it up when I was trying to draw it out and show how to measure it, right? So that's the fair value gap it had to go back and get. All of this is balanced, right? So you could have went short here because you see all that's balanced. You know, okay, it's very unlikely price needs to go back up here for any reason, right? Very unlikely. So this was your short right there. Now, this is the whatever I still can't the breakaway gap, right? This was the breakaway gap here. That's what he called that right there. He called that the breakaway gap. And then this right here was the fair value gap. And this is the measuring gap, right? This right here was the measuring gap, right? And the measuring gap, and what the measuring gap is, this gap falls pretty much halfway between the high and where your target is. Your target for this area, I think he was doing it based off the 60-minute chart, right? Based off the 60-minute chart, your target for this area based off the 60-minute chart was what was it? 34, 30, what was it? It was 30 something. He said it was 30, so I can't remember exactly what he said right here. 30, yeah, 36, 40 something, right? This area right over here, this fair value gap over here, this area here, this was like the target down here, right? Because he was talking about, he was like tweeting out what his target was, but this was the target down in this area right here. So let's go down here to 36.45. I'm just gonna put it, I think it was like 36, yeah, right here. I think it was right there, 36.44, what something. So I'm gonna put a line here, right? I'm gonna put a line right there at this fair value gap right here, right? I think it was like 36 something, 36.40. So that's at 36.45.25. So we're gonna go with 36.45. I think that was the target. Anyway, back to the 5-minute candles, right? So that's your target. That in its halfway, the gap, the measuring gap, right? The measuring gap falls. The measuring gap falls pretty much like based off your chart. This is your target down here, and this gap falls pretty much halfway in between the high and where your target is. And since that gap, since you got this breakaway, right? I'm looking at the wrong thing. This gap right here falls halfway in between. Since you got the breakaway, you got, and then right after the breakaway, you formed the fair value gap right there. And after you hit that fair value gap and left and created a new gap right there, this is the gap that he was saying he don't expect to get filled. This is, and then this gap is halfway in between, right? This gap is halfway in between the high and where you expected to go. Let's put it over here so that you can't see the bottom yet, right? Boom. Now we just formed that. We just formed that gap, right? So we got the breakaway. After the breakaway, we leave the area from where the breakaway was when it's rebalanced, and we form a fair value gap. come back to the fair value gap. And when you trade off that fair value gap, you make another gap. Soon as you leave that fair value gap, breaking this structure, boom, you come down, break that structure, and make a new gap. This gap, he's not expecting to get filled because this is the measuring gap. That's the fair value gap. And then since this is like halfway in between the high and where you want to go, then that's when you can take your fibs and run your fib from the high, come from the high and come down to the top of the measuring gap, right? Since it's halfway in between, all the thing he's doing is doing a measured move and looking one standard deviation away. That's what I was talking about, like doing the measured moves when you got the double bottom and you measure the height of the move before it made the double bottom, and then you go one standard deviation away from there. That's how you can project where the price can possibly go. This the same thing he doing here, right? So this measurement, you like, so you get the breakaway. After the breakaway, all this is fully rebalanced. Then you leave the breakaway area and you form a fair value gap. After you break that low, you form a fair value gap. When you hit that fair value gap, when you leave that fair value gap, if you form another gap right after leaving that fair value gap, and it's halfway in, approximately halfway between the high and your target, that's what he calls the measuring gap. And when you go from there, and then you can use the measured move, use one standard deviation to predict where it can possibly go, right? And then once he do that, then the price moves down to down there, and it goes, and you see as price went all the way down to here somewhere. You see what I'm saying? That's how he did it last night. That I went back and looked at it, and that's how he did it. And price went all the way down. You know what I'm saying? It kept going, and it finally went past that measured move on the next day. But this was, you know what I'm saying, this was the ultimate target down there with that PD array over there. But yeah, that's how he did it. I tore it up last night, so I want to fix that. For anybody that was watching that, go back and look at the ICT video so you can get it straight from the horse's mouth. And the only reason why I just did that right there is because I was tearing it up last night and I said it so wrong, and I ain't want nobody to go back and look at that video and be hearing it super wrong and be all messed up. Okay, now I can't remember what I was saying over here. Now I can't remember what I was saying over here. That was it. I know we had got to it, pushed up, hit the rejection block, and then sold off super hard right before the news came out, right? And then when the news came out, boom, look at that. But look at this right here. Look how algorithmic. I just noticed this just now. Look how algorithmic this is, right? We pushed up, set equal highs, right? Set equal highs right there. We pushed up, had a breaking structure, everything. Set equal highs and got a fair value gap right here, right? Before the news came out, look what it did. It took off, ran this buy side liquidity that we just set, ran this external liquidity that we just set, hit this rejection block. It took out 1, 2, 3 PD arrays in the top side, and then came back to this fair value gap and just stopped on a dime right when the news was going to pop out. Stopped on a dime right when the news was going to pop out. And then as soon as the news came out and the news was bad, it sold off. It positioned itself. The algos positioned itself to be ready to go up or down. They position themselves to be ready to go up or down. These some nasty dogs. These are some nasty dogs, right? And peek this. I just looked at this, right? Peek now. It came down, right? Ran sell side here, right? Ran sell side right there. Before the news came out, ran buy side right here, right? So took these people out, took those people out, and came here and waited a split second for the news. And when the news came out, sold off. If the news would have came out good, it was already positioned to take off. It was already positioned. But Tim, why you say that? I'm glad you asked that question, little Timmy Rogers. You see this line right here, this faint line? Let me brighten it up for you. I had it faint because the lines was getting on my nerve, but let me brighten it up for you. Do I have a template for this? Range equilibrium. I do. Let me brighten it up for you. We went up to a premium and came back to a discount right there. So if the news was good, we came back to a discount PDA to take off. But since the news was bad, this is all one move. Went up to the premium, and then so all this is one move. You see what I'm saying? Premium, then sell off. But it paused for a second, waiting on the news so that you hit a premium, come back to the discount. If the news was good, take off again. Took out the buy side and the premium, came down, news bad, kept going. These algos are some dirty dogs. You feel me? Some dirty dogs. Hey, the market is open. The market is open. The market is open. Sorry, I ain't just shout out a bunch of levels, but it is what it is. You got to go trade safely. You know what I'm saying? Trade safely. The news is over. You know what I'm saying? Trade your book. Do what you do. Hit the like button on the way out the door for me, if you will. Now, for everybody that's staying around, we're going to hang out for a couple seconds, and then I'm going to go ahead and watch the market for real so I can trade. Let's look at what's a going zone. Let's look at what's a going zone, and then I'm going to call it. Oh, let me see if anybody say anything in the chat. Let me see who pulled up since Robinson, of course, he pulled up. What's up, Kareem? What's going on, Robinson? My guy. Gabriel, dude, this is must-see TV. Always hit the like button. What's up? I appreciate you, Towns. What's up, Aloysius? Hey, Aloysius. Hey, your mama still watching. Good morning on this rainy last day of school week. Man, it was raining around here like crazy. What's up, Mendez? Hello, Anna. Hello, Elsa. Good morning, Queen. How are you? Spot of tea. Would you like a spot of tea? Me and Brittany just had us a spot of tea. What's up, 2K Crypto? Tim Dog, what's up with you? Here to learn and share. What happened? Why'd you do that? Why'd you do the Home Alone face? No trading today. Range is too wide. Yeah, it's crazy. It's crazy. Like, where do you find an entry on this? Where do you find a realistic day trade entry on this unless price just go to taking off? You know what I'm saying? What's going on, Stacks? What's happening with you? How do you find an entry on this unless price just take off? Hey, man, if anybody got anything, the link is pinned at the top of the chat. Feel free to pull up and share anything. Feel free to pull up and ask anything. I'm just about to look at what's a going zone. Before I look at what's going on, let's talk about what I was doing last night when I got bored. Where did my picture go? Did I close my picture? Here to learn and share. Why did you let me close my picture? You're supposed to keep me on my game. For anybody who don't know what this is and like what in the world Tim got going on that chart. I wish I could show you on TradingView, but for some reason I can't save. I don't know. Zay said his TradingView was tripping too. Do anybody like pay for TradingView? Can you save? Like, if you pay for like a plan on TradingView, can y'all save y'all charts? Because I can't save my charts anymore. Can somebody put it in chat? Are y'all charts messing up? If your chart messing up, say yes, free. Like if you got the free plan, and if you pay for something, say yes, paid, or no, paid. I have Pro Plus. You can save. So Pro Plus can save. Because when I try to save, it won't like I did all of this last night. All of this stuff that you see on this picture last night, right? Who that is? That's Towns. What's up, Divadio? Let me get you. Oh man, I'm looking at. Where's my mouse? What's happening, my guy?
Hey, what's up, my guy? I
What's
ain't
going on?
messing your trades up today, man. I just wanted to go in and say, yeah. On the screen that give you the option like chart setup and to save it. You can say kind of multiple ones on the paid version.
So the paid version, because I used to be able to save, but
Right.
now I can't save. Like I even got like auto save on. I hit control. Where is it? It was somewhere over here. It used to say auto save. Like right here, right there, auto save. I got that turned on. I hit save. You see the little thing up there with the check. It'll swirl around like it's saving it. But as
Mm-hmm.
you see, like if I come to the ES where I had put all of that stuff, if I come to the ES, see, it's gone. It's none of it's there. This is like all the old stuff that I put on there like the other day. Like if I just come in here, I'm just going to delete this right here. Delete
Right.
that right there. And you see the little thing saying save. I hit Control S. It do the little swirl. Give me the check. And then if I go to spy and then come back to the ES, now watch it
Mm-hmm.
do it this time. Come back to the ES. Get out of here. Which one was that I was on? Was I on this one? See, it's back. See that right there. See the box back. It didn't save it. I can't save for some reason. Now that was why, like I did all of that on the continuous contract. Yeah, all of this that you see on this picture right here, I did all of that on the continuous contract. Right, last night I did all that on the continuous contract last night, and but it's it's not saving it. So I guess you got the pay.
Yeah.
Yeah, so because everybody that's got to pay say yes they can save, but us freebies, they snowing us freebies.
Yep. That's what's been going on.
Hey, it is what it is. Nice to know. Yeah, what's that? You got anything else?
Now I was just coming in. Hey, dude, my guy, I wanted to tell you, man, I caught that drop this morning.
Oh, you caught it?
I caught it. I caught it from. I caught it. I was actually playing the Russell, the M2K.
Uh-huh.
So I got in at 17.25, and I rolled it all the way down to about 16.63.
Oh, you traded the Russell.
Yeah, because I when I first got in and went on the MES before I really
Mm-hmm.
kind of figured out, it hit me
Yeah.
like a truck one day. I was like, okay, we gonna pull this one back for me.
Okay, that what's up, man. Congratulate y'all. Clap it up for Towns for catching that drop, man. I was in my truck on the drop.
Oh,
I was in my truck on the drop. The adventures of Super Dad don't stop, man. I was in my truck on the drop.
I got you. I got you. Cool.
Yep. But
But nah, that's all I wanted to say, man. I appreciate everything, bro.
yeah, man, I appreciate you. Hey, but what this was right here, what I was doing, like, if y'all don't know, like ICT, he got like the 60-day back thing. Look, 60 days back, 60 days back, 40 days back, 20 days back, right? And so and then he like on one of the videos when he go through talk about breaking it down. This is what I be talking about when I say I be reading the price action like a steamy novel. You know what I'm saying? I be reading like a steamy novel because like I go back and I look at, you know what I'm saying? Like we've been doing this for longer than 60 days. So a lot of this stuff we had already talked about it. You know what I'm saying? We talked about it before it happened. You know what I'm saying? And then so I still like to go back and look at it because it'd be some stuff that I missed. I'd be like, okay, I didn't realize that it went to that. I didn't realize it went to that. We was looking at it for this reason, but you know what I'm saying? Hit it for that reason. And then if you're looking at, it looked kind of crazy. So let me break down what I got going on, right? This is what I be talking about when I be talking about you got the discount premium inside the discount premium inside the discount premium inside the Millie Rock on any block Millie. Right? So this so 60 days back, right? The big overall rectangle, right? The overall rectangle is let me see what the market doing. Nothing. The overall rectangle is let me do this right here. Now I'm gonna leave y'all up. I was gonna put y'all down, but I'm gonna leave y'all up. So the overall rectangle is the 60 days back, the highest body to the lowest body, right? It's the highest body to the lowest body at the time when I was doing it. And as you see, you know what I'm saying, it was like when I marked it out, this body right here was the lowest body, which was yesterday's body, right? And then the body over here, I can't see the date, but it's August, probably August 16th, right? It's either 16th or 17th. It's all because August 16th was the highest high. So I think it's on the red calendar. I think the red calendar body is higher than this green calendar, even though the 16th had the high from the wick. So from the highest body to the lowest body within that 60-day time period, right? And this is equilibrium right there, right in the middle where it says equilibrium 60 days back, right? So that's equilibrium for the entire time period for 60 days back as of yesterday's close. Today is drastically different because we dropped, right? But the top half right up here is the premium. The bottom half is the discount, right? And then split the top and the bottom in half. So equilibrium of the discount market is right here at this dotted line. I don't know if it looked dotted to y'all, but blow it up some. This dotted line right here, that's equilibrium for the discount market. This is equilibrium for the premium market. This green dotted line, equilibrium for the discount market. This red dotted line, equilibrium for the premium market. And as you see, when I zoom it in, like the top part of the rectangle, right, it's a red box around it. I don't know if you can tell from there, but it's a red box around it because that's the overall premium. On the bottom, it's a green box around it because that's the overall discount. You know what I'm saying? It's green, discount, buy. It's red, cost too much, sell. You see what I'm saying? And then the premium line is red, right? The equilibrium for the premium is red, but the equilibrium for the premium, this is the discount of the premium, and this is the discount. I mean, this is the premium of the premium, and this is the discount of the premium, right? Red, green, right? Because that's halfway in between from equilibrium to the high, and this equilibrium to the low. So this is the premium of the discount, and this is the discount of the discount. You see what I'm saying? It's broke up into sections, right? So looking at what we did, right? So we came down, right? We came down, baby, right? Hit equilibrium, got into a slight discount, pushed up to a premium array, pushed down, came down to a discount, right? We got to equilibrium, pushed down into a discount of the overall, pushed back up into a premium array for the overall, pushed down, right? Came back into it deep, just falling forever. Came all the way down to the bottom, deep discount, right? So we done came for the overall move. We done came down, discount, pushed back up the premium, pushed all the way down to a deep discount, right? But in the middle of the overall move, right, we came down, right, hit pretty much equilibrium, what turned out to be equilibrium for the overall move, pushed back up to a premium, came down into a deep discount, push back up into the premium again. See, we came, flushed out, pushed back up into the premium of the top half, came all the way back down. This one we hit equilibrium of the other one, right? Then once we got down here and we start working our way down, boom, now we're in, you know what I'm saying, we're in like a deep discount, but we working in the discount area of the overall move, right? So we steady pushing down, we steady dropping down, but we're in the discount. We steady pushing down, right? right? So then when we get down here to the bottom, we start consolidating a little bit, and then we push back up into a premium of the discount portion of the move, right? And then we came down, baby, to the bottom, poked out below the bottom, came back in, right? And then today flushed out of the back part of the 60. I just rushed through it, you know what I'm saying? But like last night, I was going through looking at all the, and then what I left on here, I left all the active PD arrays on here. I left this fair value gap is active, right? So I had a fair value gap over here. I had I think I might have had I had a I don't know, I had something over here, right? Just different things. I had different stuff, but I was deleting them off once I saw, you know what I'm saying, that PD array had been taken out, right? So all the PD arrays that has not been taken out yet, I still got, you know what I'm saying, I still got them on there. Like this fair value gap, this order block, this weekly fair value gap right here. Still got that on there. This daily fair value gap right there. This weekly high right there, this 4-hour rejection block. These are all the active PD arrays that's still to the upside, that's still on there. We still haven't taken them out. So I still got them. Well, I had them on. I ain't got them on there no more because I couldn't save it. But I just left what was still active inside the range that we was looking at. You know what I'm saying? So that's just what I was doing. I was bored last night. So I went back, and it gives you a look of like how the price actually moved through that range. And it gives you a good indication of once the market reverses, since we're in a discount now. We're in a deep discount. So now we're going to start moving back to a premium at some point in time, right? So now we can start to look at, okay, and then like you shift it forward like every day. You move it forward every day, and you know what I'm saying? And like your 60, because eventually your 60 days gonna be the highest body of the 60 days. And this gonna be the price. That'll be the range you looking at. Let's go over here to the ES. I'm on the ES right now. Yes, I am. I'm on the ES right now. Let me pop out my quarterly shift thing here. Hide this other stuff. All right, so looking at my quarterly shift thing and put it on days, right? So get out of there, volume imbalance. So like this top line is my 60 days back. See, 60 days, 60 bars. This is my 40, and this is my 20, right? So if I take all this right here and shift it forward to today, right? Now you see how it's moving. But let's move it over. Let's move it all the way over to when this right here is the highest body of the 60. And move it over there. Let's just say November. We moved it over to November 21st, right? Move it over to November 21st. At that point in time, you know what I'm saying? That body would be the highest body, you know what I'm saying, in the time frame, right? We move it over till we get like a new body high, because last time this was the body high. So move it over to November 21st, 60 days back from November 21st. This is the highest body high, right? So then you just run the field from that body. Let's just say today is the lowest low, right? We just pretending right now. So boom, there you go. Turn my snap off for a minute. 38.53 is the equilibrium, right? So 38.53 is the equilibrium, right? Okay. And then now that 38.53 is the equilibrium, that's the equal. I'm just gonna make this. I'll make this a black line real quick, just for 6. Okay, so that's the equilibrium there, right? So then you'll come up here. What I said that was 38.53. Yes, 38.53. Then you run the fib to 38.53. Right? Boom. And now 40.25.75 is the halfway point for the premium, right? 48.25.75. That's the halfway point for the premium. We're gonna make that red. I put ED. And then you go to the bottom. Go back to the bottom. We just pretending, you know what I'm saying, that's the bottom. We even though it, doubtful that it will be from the bottom to the middle. All right, 38.53 even. Okay. $38, $36, $86, $75. $36, $86, $75. All right, so boom. That's the all right, equilibrium discount for the premium. Move this over to the side so we can see the words. And then I'm just gonna freestyle a box real quick. It ain't gotta be perfect. Ain't gotta be perfect. Right there. So boom. Like that, like that. And then now what that does, that give you, get out of here, lines. Now, what that does, that give you a good hold on for a second. This is gonna drive me crazy. All right. Sorry, y'all. Y'all know how my OCD get to acting up on me. Expect equilibrium. Got it. All right. So what that does, just say, let's just say in the future, right? When we get to November 21st, even though we ain't got no, you know what I'm saying? It'll be candles. It'll be candles. It'll be candles all the way up to here. You see what I'm saying? It'll be candles in here somewhere, wherever the candles are. But so wherever the candles are, but seeing like now where we are now we can look back. Let's just say we ain't even gotta wait for those 60 days, right? We ain't even gotta wait for them 60 days. We can use it. We can use this right now. If we just take this right here and moved it over, let's say we move it over to tomorrow, Monday, right? We put it at Monday, right? Boom. So now we got it at Monday, right? We got it set at Monday. Did I not set it at Monday? No, I didn't set it at Monday. What did I set it at? I said it at Monday, November. I'm like, wait a minute, that ain't Monday. Okay, so 13, 14, Monday. Boom, set it at Monday right there. So we set that at Monday, and why are my lines off? Hey, I'm not right with my lines. What's going on with my lines? Yeah, hold on, man. Something going on with my lines. I got to get my lines together, man. This gonna drive me crazy. Hold on, let me hide this. Get out of here. Yeah, my lines are off. Yeah, my lines off. I'm like, wait a minute, man. Something ain't right with my lines. All right, 64 to 20, 64 to 20. These here. Okay, boom. Now, I'm like, yeah, my lines ain't right. It like my lines was off of my my lines were off of my my monthly things. Yeah, okay. So now, so that means I probably drew all that wrong. Let's see if I drew all that wrong. Cause my lines weren't on right. Turn this back on. Oh no, I drew it right. So when did my lines get off? Yeah, I drew it right. So when did my lines got off some kind of way, man? Y'all excuse me, man. I was all over the place just now. Now we're gonna move this back to Monday. Right? It's Friday, Monday. Boom. Okay, so we got it set on Monday. Right? We got it set to Monday. Let's see what the market doing. Oh, we got a nice little push up. Let's break this down real quick. 15 minute. 15 minute. Oh, got a nice little push up right there. Nice little push up right there. Man, this thing right here. Okay, we got a 5-minute breaking structure to the upside. It's so crazy because we in such a deep discount. You like it can only go up. You like it can only go up, or you got a breaking market structure to the upside on the 5-minute. Because you can't even look like the hourly. What are you gonna glean from that? Nothing. On the 4-hour, what are you gonna glean from this? Nothing. Besides the fact that we got a long wick right here, And see, here's the thing. I just decided I ain't gonna trade nothing. Here's the thing, like we got this super long wick right here, right? On the 4 hour. And y'all already know how I feel about we typically revisit these wicks for some reason. We don't have to. We totally don't have to revisit this wick. But let's drop lower and see what's going on inside that wick. On the 60-minute, okay, both ways, offered both ways, offered both ways. That's a good thing right there. So this is all of this from here down, all of that is rebalanced, but it also sets up what? A rejection block right there. So we're setting up a rejection block right there. Let's go ahead and map this out while we're talking about it. So what is hourly candles? I need to set some more templates. Okay, so got a rejection block right there. The low is 3502 even. Okay, so got a rejection block down there. All of that's balanced. All of that is balanced out right there because we got the we offered both ways there. We came down, ran out the low, offered both ways there. So on there we're balanced out that low. Okay, so now that we're balanced out from here to here, we're balanced out and we're working on a fair value gap right here. This counter still got 11 minutes, so this gap isn't formed yet. Man, hope I ain't trying to get what Water had. Got a breaking market structure to the upside. This right here is looking like a good entry right now to the long side. Mark that just for a second. This is looking like a good entry to the long side. Don't have a give me something red. Just need a red line. All right, that's looking like a good entry right there. Got a breaking market structure right here. Working on a fair value gap. All of this down here has been balanced out. Right, this is the rejection block. All of this down here has been balanced out. So if we come down, touch that just a little bit past that, that'll be fine. That's on the 15-minute. Let's go to the 5-minute. Okay, on the 5-minute, excuse me. Okay, we came down, right? So we came down to an area. We broke the low, right? We broke the low here, there, traded up, took off here. So on a higher time frame, this area right here. So we got a let's see what it looked like on the hourly. We got the rejection block. Here we come down to the low. This right here got a potential to be an order block right here. So these 3 candles right there on the 15-minute, that's all inside there. So that we got an order block, we got a rejection block. Okay. Order block, rejection block, got an order block right here. What makes this an order block in the mind of Lil Timmy Rogers, this 15 minutes, is the fact that we came down to the low, to a low. We're going to look over to see if that's some type of support. But the way we stopped right there, it looked like it is some type of support. 15-minute imbalance, change it to a solid line. Boom. Order block 14th, 04 p.m. All right, so we came down. Let's see what type of support that is we came down to. Let's go to the weekly candles and see. On the weekly, let's put a line there so I can look back, because it's looking like some type of support that we came to. And we came down to, yes, we got a previous high right there. That's a PDA. That's some type of support. We came right here to a low right there, a weekly low, a weekly previous high, a previous swing high, right? So yes. So that's support. That's a support area. So yes, that will make that, in Lil Timmy Rogers' world, that's an order block to me. If I'm wrong, let me be wrong. But as far as my take on what order blocks are, that's an order block right there. So we got a 15-minute order block. We got a hourly rejection block, right? And we got a move up. We got a nice move up. 7 minutes to go, working on this fair value gap, breaking market structure right here at 35, 25, 50. I think that's 35, 25, 50. Get my divergence up. Everybody moving in unison. Everybody moving pretty much the same. So 35, 25, 50 breaking market structure, working on a fair value gap on the 15-minute. It's not closed yet, but looking like we can pretty much already call this. It don't look like, I don't think we're going to sell down that hard in the next 6 minutes to come back and make a lower low on this candle. So I'm going to go against my own thought process and go ahead and mark out this fair value gap real quick. I'll move this line. You know what? Since it's not already made yet, instead of marking the gap, I'm just gonna change this to the color of the 15-minute gap, and we'll put it on the top and the bottom. I'm gonna go wick to the wicks, so I can know that that's where it's probably gonna be, instead of drawing out the box already. Okay, so that's the fair value gap right there on the 15-minute that I'm watching. Drop down to the 5-minute. Okay, we got a 5-minute fair value gap right there too. So we got a 5-minute fair value gap right there also. Right, I don't usually mark that out. So we got a 5-minute fair value gap there also at the breaking market structure. Go all the way down to skinny mini. See what skinny mini looking like. Skinny mini Cocoa Pop. Okay, skinny mini got something down inside the order block. Skinny mini got a fair value gap down here inside the order block. Look how big that count is. Counters go crazy when I get that count out the screen. All right. Skinny mini. His range so wide. That's what I be hating, man. This range be so wide. 35.75. All right, so that's equilibrium for this entire move right here. That's equilibrium for this entire move right here at 37, 35.75. What time is it? 12, 10, 12. Yeah, we starting to slow down again. Yeah. So that's looking like a good buy right there. If we get up into a premium, it can be a good idea to try to short back to this fair value gap, or you can just sit on your hands and wait till it come back to this fair value gap to buy it up. If we push all the way up to a premium before coming back to it, you know what I'm saying? If we push all the way up to a premium before coming back to this fair value gap, it can be a good idea to short back to the gap. But if we just come back to the gap before going to the premium, I'll be looking to go long off of this fair value gap here because we got a break in market structure right there. Skinny Mini did have something down inside this order block that I wish wasn't there. 4 minute is good. 4 minute is good. Everything is above the order block, above the 15 minute order block. 3 minute is good. Everything is above the 15-minute order block. 2 minute is good. Everything is above the 15-minute order block. Yes, everything is above. And then the 1 minute. The 1 minute is the only one. Is the only one with something right here inside the 15-minute order block. Right there. So, like I say, that's the gap that I'm looking at going long from. But it's got something inside there. So this the where you be at. Do you take the entry expecting the extra drawdown? This will get me a lot of times because it's like I be waiting on this drawdown here, but it'll come near and take off, or to come near and take off. It never comes back to the lower. And then every time I try to go with the I'm just gonna go with the higher time frame, and I try to go there, and then it come all the way down to the 1 minute, and I take a whole bunch of heat for nothing. Because that's a big range right there. From this 1 minute down there, man, from the 1 minute fair value gap to below the low, that's outside my risk management down there. So I couldn't even go to that. I would have to go below this low, right from the 1 minute down to this low here. That's within my risk tolerance. Yes. So that'll be like a 6 or 7 point risk right there from this 1 minute fair value gap. The bottom of that 1 minute gap below this swing low, that's within my risk tolerance. But from this 15-minute fair value gap below that low is outside my risk tolerance. Below that low is definitely outside my risk tolerance for You know what I'm saying? This type of trade. That's why I hate is down there because I can't. I have to. You know what I'm saying? Like wait to. I will have to wait to see if it's gonna go get that, and ain't no guarantee that I get it. It so it can also take off without me. Cause anything on here, let's go back up 5 minutes. See, there's no. The lows are all down here from the 5 minute time frame. I go back up to a premium. What time is it? 10:17. I ain't gonna take no trade today. Anyway, it's 10:17 and it's starting to move slow. It ain't gonna give me nothing. What was I saying on the other thing? What was I talking about on the other thing, y'all? Do anybody remember what I was saying? What was I saying? I'm sorry, I've been ignoring the chat. Ali, what's up, my guy?
Hey, good morning, Tim.
Good morning. Good morning.
Yo, everything you was just talking
Ali,
about.
what's up, my guy? Oh, hit the mute on the YouTube. Just hit the speaker. Hit the speaker on the YouTube.
Got you.
All right.
Everything you was talking about was about the 60-day look back, right? Am I
allowed yeah, that's what I was saying. Yeah, appreciate that. Yeah, go ahead.
I can't share my screen on here, huh?
Yeah. Share it.
Let me see something. Let me go right here. Can you guys see this screen?
Just hit share and I'll put it up there.
Let me go. Let me see. Hit share. Where that's at?
It's at the bottom. It says present now. Like on mine, it say present, and when you click it, it say share screen. I'm not sure how it show up on your side.
All right, I got it. It says present share screen right there.
Yeah,
it's asking me some questions. All right, let me see. Okay, y'all can see me.
Yeah, once you pop it up, it'll come on my dashboard, and I'll put it up there.
Enter entire screen. Yeah, go entire screen. Let's see. Yeah.
There you go.
Y'all can see this.
Yes.
All right. So I was looking at the ICT videos with the 60-day look back, right? And he was talking about when it's a significant market structure break, which occurred over here on the 22nd of August.
Yeah.
He said go to the first day of that month. That's this line here. Mark back 60 days. That's this white line here. It says look for us to take out all the highs and the lows in that range. We had already took out the high here. And we definitely came back right at 60 days over here. This the 60 days. We came right to these lows and knocked them out.
Exactly. Yes.
So everything you were saying spot on. This is just the way I heard him say it. You got to go to the first day after the market structure break, and then you can go on and do your thing that way.
Yeah. Because in the video he was talking about breaking it down like from the first day of the month,
right?
And then and that's what I was about to get into. I ain't mean to cut you off. Go ahead. I'm sorry.
Yeah, and then just the one last thing is I said I was gonna pull up on you today, man. I took this little note down. If you go to the monthly, all right, we gotta spread that out. On the core content month 3, the next setup. It's called the anticipatory skill development. It's a 15-minute video. Now, inside about 3 minutes, he talk about, you see this month, these are monthly candles right here.
You say month 3, the next setup?
Yeah, month 3 is the next setup.
All right.
Anticipatory skill development. And in that one,
quick note.
In that one, he talks about how to draw a good range. And he said, once we created this down candle here, this on the monthly chart. Let me see if I can scoot that down. This on the monthly chart right here. Once we made this up close candle on the down move, right? And then we took the low on this up close candle. He said, draw from the bottom of this up close candle to the top of the high of the down close candle to the left. That would have been this one, but we already in that one. So go to the next one, to the top of here. So I got a green line from the bottom of this candle here and another green line at the top of this red candle. And he's like, that's your range. Once this candle blows through this one, wait for the trade back up to this green candle, and you good to go all the way down to here.
Yep.
He said that on that video I'm talking about right there. Now, I'm gonna go and step aside, man, and let you finish doing your thing.
Oh no, you good. You good. Basically, like everything you just said was like the stuff that I was about to be talking about with like using the range. You know what I'm saying? Using the range, looking back. So because I was about to say you can kind of project what lows and highs we gonna be attacking. That's all I was about to get into, but you already came on and dropped the gem for me.
Yes, I don't know if I dropped the gym. I'm just, you know what I mean? I'm just learning, you know what I mean?
Hey, we all just learning, man. We all just learning. But I definitely remember that video when you was talking about the I was marking it because I was gonna go back and look at it again. But that's one of my favorite ones when talk about some marking the range, looking back at the up close candle. You know what I'm saying? Once you break through it and then going to, that's why a lot of times when you see me marking my range, I'll be going to those candles and I'll be like, okay, where is price? Because a lot of times you got to figure out like, where are we in price? Are we in the middle of the move? Are we at the beginning of the move? But if you keep the concepts in your mind, keep it fresh, and you looking at it every day, you can start to spot, okay, boom, we at the beginning of a transition. Oh, we still in the middle, I need to wait. Or this is a key level we just hit. You know what I'm saying? You can start to pick up on that stuff and start to that Chinese start making sense.
Yeah, man. And I like I said, I got these notes here, and I was going to short SPY lean. We hit this the other day. I was going to short SPY lean to there, man, but I hadn't seen it work, so I didn't. You know what I mean? So I was just watching it. I got my notes. You know what I mean?
And that's key. I'm glad you said that. You say you saw it coming up, but you never saw it work. So that's key. He just dropped the gem. And I don't know if y'all understand what Ali just dropped. That is a gem. Just because it works in theory, until you prove that theory yourself, don't risk your real capital. And right now he proving the theory himself because he going through it. He saw the setup, he noted the setup, he called it either in his head or with a paper trade or just whatever, and then watched it play out. Now that has solidified that, that do work to him. He's tested it for himself. You see what I'm saying? Don't go out there and just risk Roger because ICT said so, because Tim said so, because Ali said so. Take your notes, play it out in real time for yourself, and then risk your capital. You feel me?
That's a man, that would have been, this is on the ES, by the way, the continuous contract.
Yeah.
But, even over there on the SPY lean, it was the same setup.
Yeah.
And that over here, it's man, that's 200 and some points. You know what I mean?
Yes.
So it would have been crazy, but like I said, I had it in my notes. I didn't take no trade. I just watched it. You know what I mean? Take some more notes. Get ready. You know what
I got comfortable with, man? Ali on the real. You know what I got comfortable with? I got comfortable with the fact that the market will always present another opportunity. Yes, you know what I'm saying? Me and Calandra, we say all like whenever if I miss a trade, or if I mess around and choke myself out of a trade, you know what I'm saying, because I cover too early, or I cover at a spot where I think, okay, that's a good spot to cover, and then it go against me, she always be like, live the trade another day, baby. That's you know what I'm saying? That's how I say that, live the trade another day. So it's like, you know what I'm saying? The market will always give you another opportunity. And just like that, you said, oh, this was a 200 and some point move. It's going to be other 200 point moves. You know what I'm saying? But if you go chase something, if you go, you know what I'm saying? Don't go chasing waterfalls. Hey, but yeah, man, you summed it up for me, because that's all I wasn't going to like point out those specific things from that video, but that's all I was going to talk about, using that look back range to identify the key highs and lows that the market can potentially take out. Just like you said, if you go back 60 days, within them 60 days, we took out them highs and lows. You know what I'm saying? And that's all I was going to be talking about. I appreciate you for that. You saved me, you know what I'm saying, about 3 weeks of talking.
All right. Hey, man, it was good talking to you, man. I'll try to catch you some other time.
Oh, yeah,
But,
man. Pull up anytime. Pull up
for sure, for
anytime.
sure. Spider Gang, y'all have a great day.
Hey, how do you say this name? How do you say? You got to tell me how to say your name. Pashala? Is it Pashala? I appreciate that, Pashala. That's my first time ever seeing that name. If this ain't your first time pulling up Pashala, I truly jalapies. But I've never seen that name before, and I hope I ain't teared up Pashala. But I appreciate you. I appreciate you for saying that. The range, what's that? The range, bearish order block to bullish order block. Okay, then that what the range was, the one he was just pointing out. Here to learn to share. You still up in here? I'm still trying to learn that live trade. Oh, live to trade another day. Yeah, that's it, man. Live to trade another day. I've become real comfortable with that, man. I've become real comfortable with live to trade another day. Let's see what the yeah, and that's pretty much all I was gonna say. That's pretty much all I was gonna say. Like what I do, like he said, if you notice, like if I take this, if I take these what's the name here, right? I take this and I slide it over to the first trading day of October, right? Boom, right there, boom. So you notice if you look at like all the little vertical lines that I got, all the vertical lines, they go back like a month. They go back a month. You know what I'm saying? They go back a month, right? So it's like not a month, it's 3 months. They go back 3 months. All of these lines are 3 months. It's like quarterly lines, right? So I got the quarterly lines because it's all, I don't know if that's the same video. It may be the same video, but it's talking about, you know what I'm saying, the quarterly change, like the quarterly change of the market, right? And you calibrate it from the first, when you take out, like he said, the significant move, you calibrate it from the first trading day of the month. Like we just took out a significant low. This was a significant low we just took out. And you see I set it to the first calendar trading day of the month right there. Boom. We took out a significant low right there. Boom. Come back to the first day of that month. And then now you can look back. You know what I'm saying? What's the highest high? This the highest high right there. The one that we had marked out. It's the same one. It's the same one from, did I close my picture again? Let's see if that's the same high right there on that date. I closed my picture again. Here, learn to share. Why you keep letting me close my picture? Yes, look like the same high, August. Yes, August. Yes, same high. It's the same high within those 60 days. You know what I'm saying? From the first of the month. We just took out a significant level. It's the same high within those 60 days, right? And so we done came down. We done took out these lows. Now that we've taken out these lows, if the market starts to reverse, right, you can add them. You know what I'm saying? You can start to add stuff like within these you got these this is like the highest high, right? Coming these 20 days forward right there, right? So then we coming back, and then you can start expecting the market to attack. Start expecting the market to it. What it is, Ali pulling back up, or did he just stay there? Oh, y'all can't even see the screen. That's what it is. We can't see the screen you talking about. I appreciate that. I was just talking my behind off. I ain't saying it back over. You can just use this to look at like the highs and the lows, you know what I'm saying, for the algos to potentially attack within the, you know what I'm saying. So we going 60 days out this way. You see what I'm saying? So like within these 20 days and these 40 days, you see what I'm saying? Between this time range right here, that's your, you know what I'm saying, your 60-day pass. You see what I'm saying? From this 20 back to this 40, right? That's your 60 days of motion right there, right? And then from this 20 to that 40 right there, that's your 60 days of motion into the future from the first. And then from the first to this right here, that's your 60 days in the future from the 1st of October, right? And then looking back, these are the different PD arrays that you can expect the market to attack, because we just took out a really significant low over here. We took that low out. You see what I'm saying? And then now we're if we start reversing, you can start looking at what's in the scopes. You got this high that was made in this first 20 days, right? That'll be your first high, you know what I'm saying, in your scopes to be looking forward to overtake. You see what I'm saying? Then what's in the scope, you know what I'm saying, within the 40 days back, right? This high and this high and this high are in the scope within the 40 days back. You see what I'm saying? And then 60 days back, it's the same high. So it's like, you know what I'm saying, looking forward, you can, you know what I'm saying, you can expect the market to try to start attacking all of these right here. Will we get all the way up there? Ain't no guarantee we're going to get all the way up there within that time, but this is the, you know what I'm saying, this is what you can start to watch for the market to attack. See what I'm saying? Because looking at this quarter right here, look at what we did for this whole quarter right here, right? We came up, right? Took out these highs, right? And then turned around, came back down, took out these lows, right? All within this quarter right here, from June until October. From June to October, right? Start at the beginning of October. Let's move it over to the start of October. I mean, the start of, what I said, October, start of June. Let's move it over to the start of June, right? May, June 1st, right there, boom. So for the start of June, right? For the start of June, right? We go back here. We got like within the 60, that's the highest high. Within the 40, this was the highest high. Within the 40, this was the lowest low, right? So we come out 20 days, right? Well, within the 40 and the 20, within the 40 and the 20, this was the lowest low. We come out within them 20 days, boom, we knock that low out, right? We come out to the 40, we getting close to this high, didn't quite make it, get out to the 60-day range, boom, we took out this high right here, right? And we still bearish. We still bearish. So boom, we came to a significant high within them 60 days from June 1st, took out that high right there, right? That's significant how we took out. Boom, right? So then we started our trek back down. And then as you see where we are now, you know, now we done came down and took out this low. But within this quarter right here, we got all the way back up and took out this June and May, April was the part of April and May, those highs right there. But this is a way you can look back and, you know what I'm saying, cause I can't, what do you call it, the IPDA range, I can't remember what the IPDA stand for, but it looks back like 60 days, and he break it down 60, 40, 20. You know what I'm saying? And it show you what the market can potentially be reaching for within that time frame. And you always got to keep in mind, it don't always have to go all the way to the top or all the way to the bottom. You know what I'm saying? But it gives you a nice roadmap or bridge, as it, you know, like he said, building bridges on the video he dropped the other day, building bridges. You know what I'm saying? Because this right here, this can be the conception of a new bridge, right? And if this is the conception, let's say this low is the conception of a new bridge, right? And our target, we look back from October 1st, right? This is the highest high within these 60 days, right? This is the highest high within the 40 days. This is the highest high within the 20 days, right? So if this is the conception of our new bridge right here, let's just say this low that we make today, we just gonna, God dog it, I want a horizontal line. Get out of here, line. Let's just say this, why isn't it snapping? Oh, my snap ain't on. Come on, tighten up, Tim. Right? Let's say this low right here that we just made today is the conception of a new bridge. We're going to take that as this is a conception of a new bridge. Now we got, do they have targets on here? Do they have targets on here? Oh, I thought that was a search. I thought that was going to let me search. What is that, a magnifying glass? I thought that was going to let me search. Do they have targets on here? Is that a target? Come on, y'all don't have targets on here? Okay. Now we got right. Now we got places along the way. We got little road maps along the way. God dog it. Why can't I move this? What in the world is going on? Now it moves. Okay. There you go. Man. Oh my God. Oh, I see what's going on. When I hover over it, it's so close that it's catching the other thing. Okay. That didn't work out like I thought it was, but who calling me? Hello? Hey. Oh, what's up? That was my sweetie, y'all. I'm sorry about that. She said she had sent me a text, but she didn't tell me what it said. Did Timothy go to school today? Oh, yeah, you just asked me that. I thought it was something different. Oh, that text. Football. We will try to reschedule, but not likely being this late in the season. We are hanging on by skin of our teeth with varsity. Parents, due to the number of JV linemen, we only have 6 with the flu or concussion today. JV game is canceled. Spencer has 8 out. Man, so the team that they was playing got 8 people out, and we only have 6. So they only got 6 people. They only got 6 linemen because the rest of them got the flu, and the team they playing got 8 people out with the flu. But I flew coming through Columbus, Georgia, man. So like I was saying, those are some highs. You know what I'm saying? Those are some highs that you can target. You know what I'm saying? If you're just looking for like major, if you're just looking at buy side liquidity runs, you know what I'm saying? Then you got um a daily fair value gap right here, right? There's a daily fair value gap right there. You can target. I'm just gonna put that on there. I'm gonna leave the target on there for that. Then you got a daily fair value gap, just like different things. You can just put it in the crosshairs. You know what I'm saying? You got a daily fair value gap there. You got another daily fair value gap over there. Just the, you know what I'm saying, like the obvious ones that pop out. You got to try to get intricate, like looking for like the fancy words like breakers and order blocks and fair and rejection blocks, and you just look for the basic imbalances. You know what I'm saying? Gaps, and more gaps, right? You can start to set maps and like road maps. So all right, so here we go. We in like the first 20 days, right? We set this swing high right here, right? We set this swing high right here. So you can project out and be like, okay, by the end of October, early November, you know what I'm saying? This could be a good target for you if we start showing signs of reversal. See what I'm saying? Because this swing high right here was made within this first 20 days right there, right? It's made within this first 20 days. So as you start to go out, the further you go out, the more of these highs you should, if we turn bullish, the more of these highs you should start to look to attack as you go out this way, because we just took out a significant level. So as you go out this way, you start to look for these highs, right? So as we move forward, right, so this was within this, you know what I'm saying, coming back within these 20 days, you got this high right here, right? So within these 20 days, you got this high right here. Extend this high out in time. Make sure I make it like clear, right? So extend this high out in time. So it's within 20 days, right? So let's move out to this 40 day right here, right? So coming in, we came down, we broke a significant low, right? And so now as we start coming back, right, within these 40 days, right, you're looking to take out this high right here, because it's within 20 days back, right? And you're going 40 days out. So within 40 days, this is your first target to take out from the previous, right? But in order to take it out from the previous, we've made a high in the look forward, right? We made a high and look forward. So that will be your first stop. Boom. You take this out. Is the market still bullish? You see what I'm saying? Then boom, you take out this first high within that. So that's why I say within like the end of October. If at the end of October we go ahead and knock out that high, then you can set your sights on boom, the next high that's within these 20 days to be taken out within this 40 in the 60-day cycle, right? So boom, let's say we get up there and we take this high out within the 40, right? All right, so we come up and say we take that high out within the 40. Boom, take the high out within the 40. Is the market still bullish, right? So now, is the market still bullish once we take that high out within the 40, right? Is it still bullish? Then you set your target on the next high. You see what I'm saying? That's how you can plan out using this look back. You can plan out, hey, where do I expect the market to go where do I expect now that we got, you know what I'm saying, this major, you know what I'm saying, we got this major low taken out. Now, if the market show you a reversal on the, you know what I'm saying, let's go to like on the daily or the 4 hour, break it down to the 4 hour, right? So now on the 4 hour, looking at the 4 hour, right, the market give us a breaking structure to the upside on the 4 hour. You just say we come up here, get a breaking market structure to the upside on the 4 hour, right? Break, we come up here and break this swing high, break that swing high. Let's say we get up into this daily fair value gap that I marked out right here. We get into this daily fair value gap right here. We got a 4 hour fair value gap there, and say we start pulling back, right? We start pulling back. We got this breaking market structure. It can be a good idea to get you some calls. Boom, buy some calls for just say December. You know what I'm saying? Buy some calls for December, or buy some calls for late November or whatever. How much, you know what I'm saying? And then this high right here can be your target. That can be your low hanging fruit right there, because we just took out a significant level. And then on the 4 hour, just say we get up here and get this breaking market structure on the 4 hour. Boom, once we break market structure, right, and stuff, even if you don't want to do it on the 4 hour, just on the daily, right? Just on the daily, spam risk, get out of here, spam risk. Just on the daily, right? On the daily candles, let's say we come up here and we close the day down here, whatever, right? And then we come up, we get us a breaking market structure, or we get back to this daily fair value gap right there. That's going to give us a breaking market structure. And then we start to pull back, right? We start to pull back after we hit this on the daily. Boom, we get up there on the daily. Let me draw a little arrow, right? Let's say we come right there. We're just going to give it to 50%. Gonna come from where we are now, pretend like that's the close, and we're gonna give it like 50% of the fair value gap. What's this right here? Friday, Monday, Tuesday, Wednesday, right? Let's just say the middle of next week. We're just gonna go to the middle of next week right there. So we get right there, right? Boom. And again, it's get the same thing, giving us the breaking market structure on the 4 hour, got back up here. Let's just go into the middle of the 4 hour fair value gap. Boom, right? Middle of the 4 hour gap. And then we start coming back down, right? Let's just say we come back down. See how we working on the fair value gap there. Let's just pretend like that fair value gap is the only fair value gap that's there, right? So we come back down, right? We're gonna pretend like we'd have moved over in time, but like on this day right here. So Wednesday, Tuesday, Thursday, Wednesday, Thursday. I just come over there sometime. I'm just picking a day, whatever. Come back down here. Boom, hit that like that, right? Now that's when you be like, okay, I'm a buy. I don't want to go that low. That's too low, right? Boom. I just say we did something like this right here. Go to the there to there, right? Then we come back to the breaking market structure right here. Boom. I don't want to go down there because that's too low. So we just gonna pretend like we got candles up and we come back to the breaking market structure. Boom. Come back to the breaking market structure down there. Now you can map out your targets, right? By your calls for out in December. You know what I'm saying? You coming up. That's your first target, because that's, you know what I'm saying, that's the first high that we made in the look forward. That's your first target because it's there. You see what I'm saying? Now your ultimate target would be to this swing high right here, because that's the first one in the look back that we need to overtake, right? In the first, we came up, we start moving toward it, right? And then we stopped short of this fair value gap right here, and we pulled back down, took out the lows, right? So now that we've taken out them lows, we got to come back up the daily charts. We got to come back up here take out this fair value gap right there. Once we take out that fair value gap, just say we pull back down, right? Now all this stuff down here is worked out on the daily level. Push back up, you know what I'm saying? Take out this little fair value gap, whatever, you know what I'm saying? Pull back down again. Now all this stuff is taken care of. Push back up, boom, take out your target. Is the market still bullish? Let it let you know. Then come back down and set something here. Like just say, boom, you got this up close candle there. Once we trade past it on this, now we starting a buy model coming down, right? Once we blow past this, once we hit this target, get up past there, this right here can be an entry for another long, for this to be your target. Because we on this is the sell side of the buy model. If we start going back up, so once we get up here, boom, you got your order block right there on this side. Then on the opposite side, once you pass it, come back down, and then you buy off of this order block off that high. That's your, you know what I'm saying? That's how you can use this model to plan out, you know what I'm saying, what you possibly want to do moving forward. Man, we've been on here almost like 2 hours. Man, I'm finna go get me something to eat, man. We've been on here forever. I appreciate y'all for hanging out with me, man. Sorry for cutting it short like that, but I'm hungry. I ain't even drunk no water or nothing. I just realized I ain't even did nothing. Appreciate that for putting that in the chat. I appreciate you for putting that in the chat, Kareem. For Farrah asked for that. Hey man, I'm about to go eat me some cereal. I'm hungry. Timothy ain't got no game or no practice or nothing tonight. So I look at there. Look, y'all can't see it, but look at there. You see how it came down there and flirted with that fair value gap and pushed back up. You see how I flirted with that 15-minute fair value gap and pushed back up? This old dirty dog. Got a nice beefy red candle right here. Took out that high. Yep, took out that high. Oh, my back itching. Hey, man, I'll see y'all tonight at 6:30. If I was all over the place today, I'd jalapies. But y'all take it easy. I'm about to go eat me some cereal and watch some TV. I'll see y'all tonight at 6:30. And we'll talk about the price action, whatever it do. If I get something in my head and I want to go to rambling about it, then I'll ramble about that. But yeah, man, I'll see y'all tonight at 6:30. Gone. Yeah.